The Silicon Shield, a comprehensive guide to the iShares MSCI Taiwan ETF, EWT. As of March 2, 2026, the iShares MSCI Taiwan ETF, ticker EWT, has evolved from a regional niche play into arguably the most critical component of the global technological infrastructure. If the world's economy in the 20th century ran on oil, the economy of 2026 runs on the high-end semiconductors that are almost exclusively birthed in the science parks of Hsinchu and Tainan. Following a year where the AI supercycle moved from speculation into massive industrial reality, EWT has become the primary vehicle for investors seeking to capture the hardware renaissance. With a year-to-date return of 16.4% in early 2026, the fund is currently navigating all-time highs. This guide will walk you through the Silicon Shield thesis, the specific giants that power this ETF, and the unique geopolitical and financial risks you must weigh before starting an investment today. 1. What is EWT? The pulse of the global foundry. EWT tracks the MSCI Taiwan 2550 Index. It is designed to provide exposure to the large and mid-sized companies that dominate the Taiwan Stock Exchange, TWSE. To understand EWT, you have to understand Taiwan's unique foundry model. Unlike American tech giants that design and sell software, Taiwan's economy is built on advanced manufacturing. They are the world's high-tech kitchen, cooking the chips that everyone else designs. The 2550 structure. Because the Taiwanese market is so top-heavy, the 2550 rule is vital. It ensures that no single stock, like TSMC, accounts for more than 25% of the fund, and the sum of all stocks with weights over 5% cannot exceed 50%. This provides a necessary layer of diversification in a market that is fundamentally a one-industry story. 2. The 2026 portfolio, the AI hardware kings. When you buy EWT in 2026, you are buying the physical backbone of the artificial intelligence revolution. 1. Taiwan Semiconductor Manufacturing Company, TSMC, the apex predator. TSMC remains the anchor of the fund. In March 2026, TSMC has successfully transitioned into 2nm 2M mass production. Every major AI player, from Nvidia and Apple to the newer AI sovereignty projects in Europe and the Middle East, is waiting in line for TSMC's capacity. Because TSMC produces over 90% of the world's most advanced chips, EWT is essentially a toll booth on the global tech highway. 2. Han Hai Precision Industry, Foxconn, the assembly giant. As the world's largest contract electronics manufacturer, Foxconn has pivoted hard in 2026 toward AI server racks and electric vehicle components. While they still assemble iPhones, their growth is now driven by the massive data center build-out currently sweeping the globe. 3. MediaTek is the edge AI leader. While TSMC makes the chips, MediaTek designs the processors that go into billions of smartphones and IoT devices. In 2026, MediaTek is the leader in edge AI, bringing the power of large language models directly onto your phone without needing a cloud connection. The hidden component makers. EWT also includes companies like Quanta Computer and Delta Electronics. These firms make the specialized power supplies, cooling systems, and motherboards required for AI servers. In the 2026 market, these Tier 2 suppliers are often seeing higher percentage growth than the chip makers themselves because they are the bottleneck in the supply chain. 3. Performance Snapshot, the 2026 hardware boom. The performance of EWT over the last 14 months has outpaced almost every other major international ETF. The numbers as of March 2, 2026, current price around $64.85, testing the 52-week high. 2025 full-year return 31.2%. 2026 year-to-date return 16.4%. Dividend yield 2.15%. Taiwan has a very strong dividend culture where companies are encouraged by the government and shareholders to pay out a significant portion of their earnings in cash. The valuation reality. Despite the price surge, EWT remains logically priced compared to U.S. tech. As of March 2026, the fund trades at a forward PE ratio of roughly 17.8x. Compare this to the U.S. Semiconductor Index, SOX, which often trades at 28x or higher. You are buying the same AI tailwinds but at a significant valuation discount. 4. The Silicon Shield Thesis, Geopolitics in 2026. The biggest question every new investor asks about EWT is, what about China? In 2026, the Silicon Shield theory has become a formal part of global diplomacy. The theory suggests that Taiwan is so indispensable to the global economy that a conflict would result in an immediate global depression, making the cost of aggression too high for any nation to pay. The 2026 de-risking reality. Global fabrication. To mitigate risk, TSMC has opened advanced plants in Arizona, Japan, and Germany. While this diversifies the risk, the core research and most advanced nodes remain in Taiwan. Political stability. Following the most recent elections, Taiwan has maintained a status quo policy that emphasizes economic strength and deep integration with the Western supply chain. In early 2026, the risk premium that used to suppress Taiwan's stock prices has begun to fade as investors realize there is simply no alternative to Taiwanese manufacturing. 5. Fees and logistics. Investing for the long term. Expense ratio, 0.59%. Assets under management, AUM, around $4.8 billion. Ticker, EWT, iShares. The 0.59% fee is standard for a single-country targeted ETF. While it is more expensive than a broad total world fund, you are paying for the concentrated exposure to the world's highest quality industrial manufacturers. For a long-term investor, the higher fee is often offset by the superior growth and dividend yield of the underlying Taiwanese national champions. 6. Critical risks. The 2026 headwinds. No investment is without danger, and EWT carries 3 specific risks that could trigger a 10 to 15% correction in mid-2026. The AI digestion period. Much of EWT's growth is based on the anticipation of AI revenue. If major tech companies, the hyperscalers, report in mid-2026 that they are slowing down their server purchases, EWT will be the first to feel the pain. Energy and water constraints. Semiconductor manufacturing is incredibly resource-intensive. Taiwan has faced recurring green energy shortages and seasonal droughts in early 2026. If a major fab is forced to slow down production due to a power outage or water rationing, it will have an immediate impact on quarterly earnings. Currency volatility. EWT is unhedged. You are holding assets in new Taiwan dollars. If the U.S. Federal Reserve keeps interest rates higher for longer than expected in 2026, the TWD could weaken, causing a currency loss for USD-based investors, even if the stock prices stay the same. 7. Strategy. How to position EWT today. In March 2026, EWT is no longer a speculative play. It is a core technology satellite. The 10% rule. Because Taiwan is so concentrated in one sector, information technology accounts for 60% of the fund, most financial advisors recommend a 5 to 10% allocation. This allows you to capture the AI alpha without being wiped out by a single sector-wide downturn. The momentum entry. EWT is currently in a strong technical uptrend. For those starting an investment today, dollar cost averaging, DCA, do not buy your entire position at once. Buy 1/3 now and wait for the quarterly earnings cycle in April and May to see if the AI guidance remains strong. The value support level. Technically, EWT has a strong floor at the $58.50 level. If the market experiences a spring correction, adding to your position near the $58 would represent an exceptional value entry into the world's most advanced companies. Conclusion: the indispensable island. The iShares MSCI Taiwan ETF EWT in 2026 represents the ultimate bottleneck investment. It is a bet on the fact that no matter who wins the AI software wars, they all have to pay Taiwan to build their machines. The verdict: if you believe that AI is a multi-decade structural shift and not a temporary bubble, EWT is perhaps the most logical way to own the picks and shovels of the era. You are buying high-quality, dividend-paying companies that own the world's most valuable intellectual property in physical form. While the geopolitical noise will always be present, the economic reality of 2026 is that the world cannot function without the companies inside this fund.